Because notice when it formed inside of this window, where price is usually just forming traps and usually just leaving very weak structures. So what we do, we let for price to take out this early high that formed in this range that I talked about between near midnight open and open of the London Killzone. Alright, so how is everyone doing? Glad to be back here on YouTube. It's been a while since the last time I actually shared a proper lesson, a proper video, a proper breakdown and stuff like that. What I wanted to start with is some foundational stuff that I use in my everyday trading, which is marking the structures based on time, based on where they are, spotting the traps in the price behavior, knowing how the market liquidity shakeouts happen, why they happen, and where they go after it takes place, and just overall being able to read where the price is gravitating towards, what is the next liquidity pool price will be aiming for, and stuff like that. So I think you guys can already tell how important it is. For myself, I don't mark every single detail because, yeah, trading for 10 years, I can already see those structures. I can already see those formations in play. I can already see what price will be most likely aiming for and stuff like that. But still, it is a major part for someone who is not 10 plus years deep into their trading journey and stuff like that. And or you want to have everything cleanly marked on your charts and highlighted. This is when it will most definitely help you guys to make sure that you are on the right side, no matter if you are trading from a 15-minute time frame or you're trading from a 5-minute time frame, just using, let's say, 60-minute as your lower time frame and daily as your higher time frame. I know a lot of traders who are literally using 3 time frames, daily, 1 hour, and 5-minute. That's completely enough because you can have a rough direction. You can have a rough daily stage opening up on a new trading day, seeing if it's about to be a neutral day, if we are trading away from a certain PVA towards a certain higher time frame market liquidity pool, or let's say we are just shopping around, then dropping to the lower time frames, which is pretty much a middleman. This is the name that we use. Lower timeframes are pretty much a bridge that gaps higher timeframe and execution timeframe delivery. It's pretty much like a filter letting us know if we are about to see a movement taking place that day towards our main draw on liquidity, or we most likely going to see a pretty much neutral sideways chopping day, which is very switched to our scalp trading environment, looking for very quick in and out positions, not aiming for the main draws on liquidity that are based on the daily time frame. So now here you can see that we are on the down dollar 15-minute time frame. So now let's not go higher into the lower time frames and higher time frames. Let's focus on what we have right here. So you guys can see that this is Wednesday. This price action right here took place on Wednesday. You can see that the day prior, during that PM hours, during that so-called dead window that happens from 3 p.m. all the way up to the midnight, you can see that price was nicely consolidating here. So what it was doing, price was building liquidity, sell side liquidity here, buy side liquidity here. So this is perfect. This is perfection, because this is exactly what we want to see taking place during that PM hours, during the Asia range. If markets are very volatile, if there's a lot of volume, price is very one-sided, pushing towards a certain level, a certain PDA or something like that, this is exactly when we open on London Killzone, being a bit more patient and a bit more picky, because naturally price was outside of its proper range. Price was already outside of its proper movement, because we want to see this area right here as low volume as possible. As mentioned before, just building liquidity going sideways that you will look to get taken out during specific time of the day after the near midnight open, going into London Killzone and near Killzone. So now let's go a little bit deeper into some very important parts here. What a lot of traders don't understand, that everything that happens before 2 a.m., everything that happens before the London Killzone open usually is just a draw on liquidity, usually is a structure that will get ran sooner or later. It's a liquidity pool, even though it sometimes doesn't look like one. So you can see that after the near midnight open right here, he had this high that I personally, as price starts pushing away, as price starts pushing towards what? It starts pushing towards the sell side liquidity pool right here. The last thing that I want to do is chase price. The last thing that I want to do is follow price right here, because this window is again just generating liquidity. Most of the time it's showing false direction that will get chopped up before it actually goes towards the main draw in liquidity. So now again, as I already mentioned, I see these structures right away, so I don't mark them. But for those who want to know how I used to do this, marking the main structures and stuff like that, I simply used to use this call out tool right here. So you can see that this structure formed at 15 minutes past midnight right here. So this is a development that happened before the London Killzone opened. So this is our long on Killzone view. So this vertical line from the near midnight right to the open of London Killzone, this is everything that we don't want to trust. This is the area, this is the formation that we simply don't want to follow, because most often it will get you in trouble if you are trying to chase the market during this window right here. We will talk also about the London Killzone, but now specifically talking about everything that happens before London Killzone. This is where you can easily mark these structures. 1:30 a.m. 15 minutes past midnight, these are the structures that will act as liquidity pools. So we can take both of them and extend into the future. So now let's follow price and what happens here. So notice that price after the New York midnight open, you can even mark the opening price right here. Notice that price started pushing lower. And as mentioned before, often it is just messing around. Often it's just, again, sweeping some near sell side liquidity. But again, both the high and below, it's still a liquidity pool. These are not structures to look to trade away from, because they can get taken out absolutely anytime. So notice that price right here during the long on kill zone time, during this whole window from the New York midnight open to the 2 a.m., it takes out the sell side liquidity pool. It runs into this BPR right here, balanced price range. You can see this bearish imbalance got filled with bullish imbalance right here. Price runs right into it, and what happens? It reacts higher. It reacts higher because it ran sell side liquidity into opposing PDRA, which was a pretty strong area. Balanced price range right here. So now, does that mean that we just had a break of structure and price is about to pull back and continue lower? Absolutely not. Why? Because we have a buy-side liquidity pool that wasn't taken out yet, hanging right above us. And also, in this way, if you would be looking for price to retrace and continue lower, notice that you wouldn't only be ignoring a buy-side liquidity pool that's hanging right above. You also would be trying to trade away from a structure that I already mentioned is not something that we can trust in the market. Because notice when it formed inside of this window, where price is usually just forming traps and usually just leaving very weak structures. So this is again the opposite of what we want to do. We want to be a bit more patient with our timing. We want to completely ignore these structures right here and not look to trade away from them. Because again, in most cases, they are simple liquidity pools that will just get taken out once price actually tops out, if let's say we have a bearish direction for that specific trading day. Okay, so now notice that price after running sell side liquidity interposing PDRA, which was this BPR right here, price nicely starts running higher, completely ignores this bearish fair value gap because it's aiming for the buy side liquidity above. So in other words, what we are seeing right here is a shakeout. Price was generating liquidity. What price gives after that with this first move? It takes out the sell side liquidity, then it gravitates towards the buy side liquidity right here. It usually runs into some opposing PDRA and then tops out usually some specific window that we look for, either London Killzone or New York Killzone, and then starts pushing away towards the bigger draw on liquidity, a nightmare area that we will be aiming for that day. And this structure right here becomes just a sell-side liquidity pool to take out later on when price tops out, giving a liquidity shakeout. And again, why a liquidity shakeout? Because this whole area right here, was shaken out from both sides. So this is also what often we see during news events. Let's say we have a news event at 8:30 a.m. Let's say this vertical line marks 8:30 a.m., mid of the near teal zone, usually when dollar red folder news take place. What you will often see that price is not having a clear direction, just messing around And some traders think that is just a range, just a consolidation and stuff like that. But what most of them forget, that price is actually generating liquidity on both sides. And then it reaches 8:30 a.m. It takes out both sides. And usually the first move that takes place is the correct side, exactly as it happened right here. This was the correct side that we didn't want to get into the shorts because price didn't top out and it didn't ran the other side of the range right here. So that's if we are in a bullish scenario and we have a drawn liquidity right here, we are in the bullish delivery. Price often with this move, with this first move right here, will show its scars. It will show that the direction is actually to the upside. And most of the traders, most SNC traders and stuff like that will be looking for a continuation lower. When in reality, what will happen? Price, after taking the buy side liquidity, it will run through the downside, taking out the sell side liquidity, into bullish P array, and then it will start climbing towards the main draw on liquidity with the whole delivery, giving us a liquidity shakeout, which is exactly what happened right here as well. Price gave us this direction right here. We are pushing to the downside. Price gives a first direction showing that we will be looking for a bearish day right here because we have bearish delivery, we are drawing liquidity that we will be aiming for. But again, we are not looking to start shorting right here because we still are not in the right frame. We are not still in the right and correct structure right here. And time of the day is not on our side yet. So what we do, we let for price to take out this early high that formed in this range that I talked about between near midnight open and open of the long on Killzone. It takes out this buy side liquidity right here, runs interposing PD array, and then starts going lower. So now we will talk about all that side. Let me do it all the drawings here. Okay, so price took out sell side liquidity into BPR. It started going higher, taking out buy side liquidity right here, buy side liquidity right here. So after that, as we are already running in the mid of the long on Killzone, which is the RT window reversal time window, this is when we look left to see if we have any opposing P arrays. And you can see these two consecutive upside candles right here. This is our bearish order block. So now notice what happens here. Runs this whole buy side liquidity, runs this short-term high as well before reversing. After it runs interposing P array into this bearish order block during the long kill zone. Usually the reversal happens either in the mid of the kill zone or the second half. So this is exactly what happened here as well. Then after that, let's draw some vertical lines again. We have the end of the London kill zone and the open of the near kill zone. So let's mark everything right here. So now, again, this is where we have the same thing that we just talked about, the same window that we had right here between New York midnight open and the open of London Killzone. This is another window that we can't fully trust. This is another window that often builds liquidity that will get taken out. And even though rent price looks very convincing, this is again when out of the time it will just chop around, give no clear direction, build liquidity as it did right here. So this is exactly when you can start doing the exact same thing like you did right here. So we have this 6 a.m. high right here. And then we can, of course, even note this 7 a.m. open. Because again, we are looking for a bearish day right here from this whole setting that we already saw, not even digging into the lower timeframes and the higher timeframes. So here we have 7 a.m. low. So we mark those structures. Again, exactly what we did right here. And notice what happens here. Notice that price, after taking out this low, it pulled back into this fair value gap right here. It started pushing lower. And then what happened was a buy trap. Traders who, for whatever reason, were very fixated on long opportunities right here, noticed that this structure, how it looked like a potential continuation to the upside. He had this consolidation right here. He had this run lower right here. Then price took out the high. And a lot of traders will start looking for long opportunities to look for higher prices. And in reality, again, then we have full picture, when we have full vision, remember that we have the sell side liquidity here, and we have the sell side liquidity here that we talked about, which wasn't taken out. Remember that this actually showed the true direction for the day that we just talked about before. Because we are in this shakeout opportunity. We are in this liquidity shakeout model right here. So this sell side liquidity pool and this sell side liquidity pool is something that we want to actually be focusing on. You're not looking for any longs. We are not following structures blindly. You want to look for all the stuff that actually aligns from the top-down puzzle. And here we are only using 15-minute time frame. So what actually happens here? Notice that price runs this buy-side liquidity that I talked about. Again, as mentioned, these windows right here form structures that we don't want to fully trust. These are the structures that usually will leave a lot of liquidity if you correctly spot the main draw on liquidity for the day, if you correctly spot what happened during the PM hours, and where's the main draw on liquidity. Because all these pieces of the puzzle add up together very nicely when you pay attention to when price is forming structures, when price runs specific liquidity pools and stuff like that. Because this was very clear that this is not going to be a low of the day. Why? Because it formed before on Killzone. It ran sell-side liquidity, interposing PD array. It left all this buy-side liquidity open. And the first move that happened was lower. So for the sake of this video, ignoring all the stuff that happened on the lower time frames and higher time frames, you can instantly tell that this is just not going to be low of the day. That means that this is our sell-side liquidity that price will aim to take out, and exactly that happens. Notice that price during London Killzone longs higher forms a London Killzone high of the day right here. Then during the London lunch, it starts building liquidity again. Price right in the middle of near Killzone. Again, I think you guys remember that usually strong structures that price will look to trade away from will happen either in the middle of the kill zone or in the second half of the kill zone. And I'm talking about London and New York right here. So here you can see that London high formed in the second half of the London session. And here the high during the near kill zone formed right in the middle of it right here, which was at 8 a.m. So now where does the price gravitate towards? It of course gravitates towards the sell side, buy side, and short side. So I think you guys already remember what we just talked about. This is the same pattern that took place right here. Price generating liquidity takes the sell side, gives us direction, but we are not looking to short right away. It then goes for the upside and then goes for the sell side again. So this is exactly what happened here. Notice price builds liquidity, gave the move lower, but we don't follow right away because we want to see buy side get taken out. Then it eventually climbs higher, takes out the buy side, and then it starts dropping. So this is the exact same situation right here, just on a bigger picture, and here we have a smaller example of the same movement. Sell side liquidity taken, buy side liquidity taken into opposing pizza array, and then price takes out this sell side liquidity and a bigger drawn liquidity. So this is what we had here. Price took out sell side liquidity, climbed higher, took out buy side liquidity. Notice that we had this very neat inverse fair value gap here. That was a very nicely lining up with this buy side liquidity that formed at 6 a.m. So we can mark that. Price stopped out in the middle of the near kill zone, and then it started aiming for this first expansion's low, of course, sell side liquidity that happened at 1:30 a.m., of course, again, because we are in this bigger structure. So the 1:30 a.m. is this low right here. And then it kept on pushing, and then you can see that during the London close and PM hours, it went sideways before it eventually took out the sell side liquidity that we talked about right here. So just taking this picture, just breaking down this whole example and some key foundational parts that I personally follow every single trading day. It's truly something that I would suggest you guys to note and mark for yourselves. Remember that every situation is somewhat slightly unique. Every situation is slightly different, but still, if we have clear foundation, if we have clear patterns that we follow, this is when it will add a lot of contrast to your trading plan, a lot of contrast to your system, and of course, eventually it will translate into a better system, into a higher win rate strategy. So that is all for now. I hope it was insightful. I hope you took away some value, and we will talk very, very soon. Take care, guys. Have a great day.